This is FinTech Futures at FinovateFall, and I'm joined by Arvind Purushotham of Citi Ventures. Arvind, thank you so much for joining us.
Thank you, good to be here.
Excellent. Well, thank you so much again for taking the time out to speak with us. Just to get started, would you like to give us a quick introduction to yourself and your role at Citi Ventures?
Absolutely. I've been at Citi for about 12 and a half years. I run Citi Ventures. It's Citi's strategic investment group, one of, I should say. Prior to coming to Citi Ventures, I was a partner at a venture capital firm on Sandal Road called Menlo Ventures. And I came to venture capital via the tech world. I was a semiconductor designer way back when I first got out of college.
Excellent. So, I guess to start, it's been quite a tough year for fintech investment globally. Given the shape of the global economy at the moment, is sentiment still quite low this year, or how are things looking going into 2024?
When we think about the fintech world, Citi Ventures has been investing in fintech for over 10 years, over 12 years. We have seen sort of that first wave of fintech startups come in, be successful, become publicly traded companies, and so on and so forth. And I think fintech in 2022 took a little bit of a reset, just like the rest of the market, right? And we saw that happening. One of the things I've learned is it's impossible to be completely divorced from public market sentiment in the private world, right? And so just as the public markets have come back up this year, we've seen that optimism and come back into the private world in general. And I'm seeing some of that in fintech as well. I think we're seeing companies being started, early stage companies. We're seeing good deal flow coming through our shop. We take a very strategic oriented view when it comes to investing in fintech, and we see that interest from our business partners internally as well.
Excellent. There's been quite a few down rounds as well recently, as you mentioned there, from the heavy days of 2021, 2022. Do you think that consolidation was needed, and do you think we've found a fair level now in terms of fintech valuations?
In the private world, in the venture capital world, there's so little information about these companies, especially in the early stages, that investors can only rely on public market valuations, multiples, things of that nature as they price deals. And so in that sense, valuations are lower in that sense, based on today's public market multiples, right? And that's how people are underwriting these investments. And so I think, is it normalized or stabilized, whatever way you want to think about it? There was a period of time when the public markets were fluctuating, that people were in wait and see mode, and now it seems to be more stable, more normalized. One of the things that we think about as far as our investing program is concerned is taking the long-term approach, right? Having a long view. These companies stay in our portfolio for years, 6, 7, 8 years, and we're reacting to market conditions that can change, day to day or week to week. And so it's very important to have sort of a very fundamental based approach and have a long-term view, because these are large markets, and it takes a while for companies to mature, develop, and be a leader in a space. And those are the kinds of companies that we try to look for.
Excellent. So what kind of funding trends then are you seeing at the moment, and which areas are seeing the most kind of investment activity?
I think in the fintech space, there are sort of maybe 3 areas that I would mention to you. The first is we're focusing quite a bit on the wealth tech space, and some of our recent investments have been in and around wealth tech. An example is in Asia Pacific, we invested in a digital wealth manager by the name of Endowus. And the idea is that the fintech revolution, depending on how you look at it, started in either P2P lending or started in mobile payments and things of that nature, and it's come to every area of fintech, including wealth tech. Wealth is an important area for investment for us at Citi, and so being able to serve that next generation of wealth customers with great experiences, doing things in a seamless way is an area of focus for us. So that's been an interesting space for us recently. Second is, as the fintech world has matured and as banks have also adopted, startup capabilities, we see, financial infrastructure companies getting mature. So that's an area of interest for us as well. Things that perhaps were being developed in-house internally on a custom basis are probably available as platforms externally, maybe as cloud capabilities. And so that's an area of interest for us. We saw some interesting recent transactions happen, for example, like a company like Pismo. And so I think financial infrastructure has been important and remains important, and we see that maturing landscape, which is very interesting for a large bank like Citi, because we need that to be able to adopt. We can't work with extremely early stage startups. And then finally, it's hard to not mention Gen AI. Gen AI is something that will impact the financial services world deeply. There are obviously challenges that need to be overcome and things that we need to work through as an economy in how Gen AI gets adopted. But from end to end, whether it's from marketing to fighting fraud to serving customers, Gen AI is going to have a very deep impact, and it's an area that we've been researching and getting smarter on.
Excellent, excellent. And I mean, due diligence has also been in the spotlight as well quite recently. What are some of the key things that you particularly look out for in your investment partners, and maybe some of the red flags that would cause you to turn around and walk away?
Going back to something I mentioned earlier, we take a very fundamentals-based approach and we do deep due diligence. One of the advantages of a slightly softer market compared to 2021 is you have a little bit more time to get the work done. In addition to thinking about the strategic rationale for why we're investing, we look at all the standard things that venture capitalists look at. Is it a sustainable technology advantage? Is it a team that you can back, a team that can take this company significantly forward? All of those kinds of things. We look at is the company asset heavy or asset light? That's another area, given what's been happening with interest rates. That's an area of consideration for us as well. And the answers are not always, easier obvious. And so, in addition to all of that, the one other thing we think about, we work in a syndicate, right? These companies end up raising capital from many, many investors. And so we also look at the quality of the syndicate that we have, our co-investors. We want great people of high integrity working on these boards and providing that governance to these startup companies. So that's an item that we care deeply about.
Excellent, excellent. And just to finish off then, what advice would you give to companies looking to get some investment from Citi?
I'd just give general advice. First of all, whether it's Citi Ventures or more venture capital more broadly, I think the thing to be thinking about is, are you solving a customer pain point today, right? I think all of the other things relative to the technology, people, et cetera, all exist, competition, all of those exist. But many times in the earlier stages, it's that very amorphous sort of Cambrian stage where you're putting the idea together, you're thinking about the product and thinking about who your customers are and so on and so forth. And the more time you can spend to clarify that and sharpen that focus, the better it is. And that's something that I repeatedly see something that early stage entrepreneurs struggle with, and that is a good piece of advice.
Excellent. Thank you so much for speaking with us again, Arvind. It's been a pleasure, and thank you so much for your time.
Thanks for having me, Paul.